Hey, I'm Joshy K, Australian licensed financial planner, and today I wanted to talk about the recent RBA announcement, given that we're in November. So officially, the RBA has agreed to hold the cash rate where it currently is. Some suspected that it would continue to drop. Pretty unsurprising from my perspective, given that we're this close to Christmas. People usually start spending a little bit more in the lead up to the holidays, and so although that can stimulate the economy, that often does lead to, I guess, a bit of a runaway effect on inflation. So the reason that the RBA has held the cash rate at 3.6% at the moment is because they like to keep inflation between a target band of between 2 and 3%, and currently it's sitting at 3.2%. So again, based on my previous comment, coming into Christmas, we don't want to see that inflation rate continue to go. So it's a bit of a wait and see at the moment. The RBA could very well hold when they meet again in the new year. If inflation doesn't get under control, potentially could be looking at an increase. And so what I see has an impact on that for the everyday Australian would be, if you're someone with a mortgage, so similar to myself, probably a good idea to start stress testing your mortgage. So as an example, you could jump onto an online calculator or speak with your broker about, if interest rates were to rise by, say, 1%, what's that going to do to my repayments, so that you can adjust your household expenditure accordingly. Now, usually or generally speaking, I'd say probably a good idea to be making those repayments now, as opposed to waiting. The key being that, the downside would only be that you're going to lose a bit of cash flow. So if that's a concern, maybe it's not appropriate, but paying down your mortgage earlier is a really good idea. If they hold the cash rate or reduce the cash rate, you're actually just going to be paying back that loan a little bit quicker, so which is quite good. On the retiree side, so also linked to interest rates, are things like term deposit rates and fixed income funds. So again, holding the cash rate, a lot of retirees probably a little bit disappointed over the last 12 months as interest rates have continued to drop, because it is affecting how much income you're getting from those fixed income investments. But longer term, what I'm actually seeing at the moment is a bit more of a push for retirees towards investments that pay dividends, particularly those with franking credits. So whether that's a good idea or not, again, it's very individualized, but that's something I'm seeing. There's a little bit of a trend. But that's a bit of the update on what's happening with the RBA, bit of a wait and see after the new year. But again, I'm Joshy K. This is a new channel, so please like, subscribe. That really helps to grow things. And I'll see you in the next one.